Did you hear that? Whoa! Woo! Yeah! Whoa! Whoa! Yeah! Getting excited for tax research! Yeah! Woohoo! Yeah! Ooh. I think they're as excited as I am about tax research. Oh man. So I hope you enjoyed that. We're going to be jumping in right into the introduction of tax research discussion problems. Now, these discussion problems are meant to supplement the introduction to tax research video, so please watch the introduction to tax research video first. Then come through the discussion problems to have some practice on some of those topics. Now, not everything will be in the discussion problems from the video, and there might be some things in the discussion problems that weren't covered in the video. Anyways, just enjoy, have fun, and welcome to tax research. Let's jump right into question 1. Define tax research and list the 6 basic steps in conducting tax research in order. Briefly discuss each step in the tax research process. Okay, let's first tackle the question of defining tax research. I'm going to keep this broad because the real focus of this question deals with the 6 basic steps of tax research. So tax research in general is really just the resolution of unanswered questions in tax law. That's all it is. So the resolution of unanswered tax questions. So that could be a filing issue, it could be a factual issue, it could be all different types of things. And they could be open and closed questions, and we'll talk more about that in a later question. Okay, so that's the first part of the question. Again, I'm just keeping it very broad because the real focus of this question is next, the 6 basic steps in conducting tax research. This is very important, and it's really important that you know them in order. Now, you might be taking another tax faculty member, and they might give you different steps, less steps, more steps. These are the 6 steps that I use, and looking at all the different textbooks out there, I think these 6 steps are the best in terms of understanding the tax research process. So the first step is always establishing the facts, right? The client comes to you and says, I have this respective issue, and they give you some facts. And before you can even identify issues, you have to establish the facts. So establishing facts. And we're talking about the steps involving gathering of facts, including tax and non-tax considerations. So that's step 1, establishing facts. Step 2 is identify the issues. This tends to be the most difficult of all 6 steps because especially if you're just starting out in the tax research world, identifying issues, a lot of it has to do with more of an art than a science. A lot of it also has to do with experience. Just being able to look at a fact pattern and say, hey, okay, well, this issue is raised here, this issue is raised there. And in the introduction to tax research video, I go over 5, what I like to call the 5 income tax questions that helps you kind of articulate the areas where there might be issues. So make sure you watch that, and it's really, really important. So the tax researcher must identify both issues of fact and issues of law. And I'll talk about that in a later question. In doing so, the researcher must rely on a combination of education, training, and experience. And again, those 3 things, almost all of them, those elements, they take time. And if you're just starting out, it's tough. I know it's tough. And that's why it's so important. This step, identifying issues, tends to be the most difficult of the 6. Step 3. So step 3 and 4 deal with the authority issue, which is very important. So step 3 is locating appropriate authority. So locating appropriate, I'm using the word appropriate here to mean both relevant and important authority. So locate appropriate authority. And just like this says, we're talking about authority, the researcher must locate authority that's relevant to the client's situation. Authority may include both primary and secondary authority, and we'll talk about that in a later question. Step 4 is then to evaluate the authority. Now, most tax professionals, tax practitioners out there, when they think of a tax research class, they think about evaluation of authority, learning how to evaluate authority. And we will be talking about that in this tax research course. So there will be other videos out there that cover evaluation of authority. The introduction video, we talk about it as well. And you'll see that I created kind of a 1 through 10 system. Again, a rule of thumb, don't rely on that always. But it's kind of to help you, guide you. It's kind of good in most cases. It works in most cases, but not in every single case because, again, tax is more of an art than a science. But I'm trying to quantify it to help you understand. But the evaluation of authority, this step in tax research process requires the researcher to analyze the authority, including the current status of authority and the precedential value. So determining if one authority is weighted higher than another. It might have to do with jurisdiction, how old a case or element is, how long, when was the last time it was updated, including just the type of authority it is. Okay, step 5 and 6 kind of are the end process. So step 5 is to develop conclusions and recommendations. And this step, the researcher must arrive at his or her conclusions based on the first 4 steps of the tax research process. So this is not as important as steps 1 through 4. Steps 1 through 4 are really the meat, the main aspects of tax research. Step 5 is just taking, you've gone through, you've got the facts, you've got the issues, you've taken the authority, you've applied it to the facts, you've made your arguments, and now you're kind of saying, based on what I just said, it's more likely than not that this is the case. Something is deductible. Something is included in income. A credit's allowed to be taken. There you go. Just like that. So developing conclusions, recommendations, that's more towards the end of the steps. And then step 6 is all about the communication. Communicating these recommendations. And this comes in the form of a memo. In this tax research course, we follow a memo. If you're taking another faculty member for tax research, you're going to be learning to use the memo format. And memo format is very important. I have another question on that, and it's also discussed in the Intro to Tax Research video. This is the final step, and it's important to communicate to internally. So if you're asked within your firm about an issue, it's important to identify that, what the internal aspects are, as well as if the client asks. And there's going to be a difference. There's going to be a difference between the client letter and the memo. Okay? And this also communicates facts, assumptions, issues, sources of authority, conclusions, recommendations, and it also shows the rationale. So those are the 6 steps. And that goes through all these items. Again, to summarize, tax research is the resolution of unanswered tax questions, keeping it broad. We have our 6 steps, which are listed right here. Establish facts, identify issues, locate appropriate authority, evaluate the authority, develop conclusions, recommendations, communicate the recommendations. Make sure you know those 6 steps in order. All right, question 2. The tax researcher must find the first step in tax research. The tax researcher must find the facts as the first step in tax research. I skipped that element there, right? So just like we saw, step 1 is to establish the facts. So that's what the question is dealing with, step 1. Give examples of the kind of information that a tax practitioner might want to obtain. So let's say you have a client come to you. And normally what happens, if you're unfamiliar with the intake process, is a firm will normally give a client let's say you're dealing with an individual return, a 1040. So let's keep it simple, 1040, individual return. Normally what happens is the firm has a questionnaire, like an outline that they ask, and they ask all these questions, these areas of did you have any mortgage? Did you have a mortgage during the year? If so, did you pay interest? Do you have real property taxes? How many properties do you own? Do you have a business? Did you have interest, dividends? What kinds of, do you have wages? All these different things out there. Okay? And those are kind of what this is getting at, this question, but it's going a little bit further. But that's usually what happens is the client gets this folder, this questionnaire, this intake, this checklist of questions that they're supposed to answer. And then through that information, then the researcher or the tax professional can then say, I have some additional questions for you. So that's really what I want to focus here. So significant tax facts that a tax practitioner might want to obtain could include any of the following. And these are just some of the big ones out there. And they include the types of tax entities, that the taxpayer might own or be involved in. Okay, so if there's any tax entities out there that our 1040 client has, the client's family status. Are they married? How many children do they have? If they have children, how old are they? Are they in college? All these different things, because as many of you know out there, these things all have different tax ramifications. Clients' past, present, and projected marginal tax rates. So just looking at over the years, like what rates they've been at, okay? So their tax rates, past, present, and future, what they plan on doing, because they might be looking to retirement in the future, things like that. The legal domicile and citizenship, because that gets into the state issues. So kind of the state issues of residency, right? Are you a resident in Florida, California, New York? That makes a difference because it makes a huge difference. For example, if you're in Florida at the time of this video, there's no Florida personal income tax, so you wouldn't have to file a Florida income tax return for that individual level. If they own a business, that might be different, but residency is a big aspect of that. Also, citizenship. They might be outside the U.S. You might be talking about international issues. So there's international issues out there that deal with, are you a citizen of the U.S. or other countries? So international issues, just put citizenship. And again, I know I've identified these as issues and you're like, well, I thought that's the next step. Yes, but remember, I'm trying to explain to you that really getting at the facts, you have those issues in mind, Also, there's a transaction. What about the motivation for the transaction? So let's say that a client is considering buying a business or considering selling their business, and why are they doing that? Maybe they're trying to escape estate tax because their estate is very high and you're worried about federal estate tax issues. So motivation for the transaction, that's very important. There's all sorts of motivations out there. Relationship among the client and other parties involved in the transaction, that's big because things like related party losses, related party rules, gifts, employee-employer relationships are huge. In another video, I'm going to talk about some tax themes. And whenever I teach tax courses, I always stress the themes of the tax issues. And one of the big things when it comes to themes are when you have family, it could result in gift issues. I'm just going to write these down now. You're going to see them in that later video. This is so important. It doesn't matter what you're doing in tax practice. Trust me, this is very, very important. So family, you got gift. If it's employee-employer, well, of course, you have issues of compensation, disguised compensation. If it's between an owner and a company, let's say like a shareholder and a corporation, you're talking about distributions of property. Those are just some of the many types of relationships. Those are the big ones, the big three we can say. There's others as well. But relationships are huge. Whether special tax rules apply. You might be in a certain industry. You might have an insurance client and they might be doing something and you might need to look into, hey, you might want to know more specifically. And some of these questions you're asking the client, but others you're also just pondering in your head that this could make a big difference. And whether the transaction is proposed or completed. So I'm just going to say open versus closed. And we're going to talk more about that in a later question. But that's really important, a good segue for that next question. All right, so those are just some examples. You probably can think of so many other types out there, so many other types of examples of kinds of information that affect, basically anything that affects tax, tax implications. But these are some of the main ones out there. All right, question 3. Identify and briefly describe the 2 major types of tax research issues. So I'm going to keep this one short. So there's really factual issues, and then there's legal or law issues. Now, a factual issue involves, as it suggests, the facts, and the law involves, a question about the law. So, factual issue, again, we're now getting to the step 2 of the process. So we just did a question on step 1, establishing the facts. Now we're dealing with step 2, identifying issues. So you can have issues that deal with the facts of what's given to you. Like you need to drill down more facts, and that is an art, because you don't want to over ask information from the client. You don't want to waste their time, but you also want to get the relevant facts. And then law could just be an interpretation of the law. So there's a new provision out there that just came out in the tax law like nothing before. There's going to be lots and lots and lots of legal or law issues out there. So fact issues are concerned with problems such as the dates of transactions, the amounts involved in the exchange, reasonableness, intent, and purpose. And we identified some of those things in the last question. Law issues arise when the facts are well established, but it's not clear which portion of the tax law applies. So it could be the propositions, and we talk more about that when we get to the code sections. There's different propositions and conditions that must be met for the tax rule to apply. Could be, okay, what do you mean by what do you mean by thinking of alimony, for example? Because I use that in the video, the introduction to tax research video. What is a separate maintenance payment, or what is a divorce decree? What does that mean, right? Defining that. That's an example of a legal issue. Now, most issues in tax research tend to be a hybrid. It's very hard to, when you really get in practice, to break these up. It's really a mix. It's a mix. I mean, it might be 80-20, 80% legal, 20% factual, but usually it's a mix of these issues, a hybrid of the two. It's very rare to have just a pure factual issue or a pure law issue. All right, question 4. So tax practitioners use the term tax service regularly. What is a tax service? So now we're getting into the third step and the fourth step, which deal with authority, right? Finding authority and evaluating authority. So a tax service is a paid service that is a set of reference materials that organizes the tax authority into a usable format, making the Internal Revenue Code, regulations, cases, all the different tax authorities out there more accessible for the tax practitioner. We know that tax practitioners, they've got a lot. They've got a lot of clients they're managing. They've got a lot of stuff going on. So these systems, these tax services, and we'll talk about some of them in a moment, like Checkpoint, CCH, Bna, Bloomberg, Lexis, Westlaw, and there's lots of others out there. These tax services, again, these are paid services. There's unpaid ones too, but we're going to focus on the paid because that's what most of the tax practitioners use. So the paid, talking about paid services, where basically they organize the information to make it more accessible. So I'm kind of like identifying the keywords here to help you. Accessible. So they organize the info and accessible, make it more accessible. And that makes the tax practitioner more efficient and effective in getting the job done, right? And determining the results of the transaction. Very, very important items. All right. Step 5, or question 5, I should say. I'm so tired of those steps. Describe an online tax research system. What are the primary advantages of such a system? So we just talked about the tax services, and when I was talking about tax services, I mentioned, they're paid, these paid services. Really in mind, I had online tax research systems, but there's also paper-bound and stuff. But most people are using the online tax research systems. And again, those are those examples I mentioned, Westlaw, Lexis, those different ones. Checkpoint, CCH, Bloomberg, Bna, those are some examples. Those are the main ones. So online tax research systems provide a fast and accurate method, right? So we're talking about, and here's some more keywords. So fast and accurate, again, because remember, they're going to organize and they're going to make more accessible. So fast and accurate, and when you think about fast and accurate, you're talking about effective or efficient and effective, right? Very, very important when it comes to tax because you want both. You want to be efficient. You want to make sure you don't go over your billable hours, right, on that client, but you also want to be effective. You want to make sure you get that right. So fast and accurate is just another way to say or to use that term. So online tax research systems provide a fast and accurate method for tax practitioners to access tax information that he or she could not afford to buy before the uses of computers. So before the use of computers, everything was done through library, bounds of books. It was very expensive. I mean, some of these tax research databases are very expensive too, but not at the same level. Because if you go to a library, a law library specifically. If you have a chance, and you're in a city with a law library, go do it. It's very interesting. Talk to the librarians. They'll explain this. But the way that things used to work is you used to have a volume of, let's say, the Internal Revenue Codes or regulations or various treatises. And we'll talk about treatises, or I mentioned treatises in the Introduction to Tax Research. And anytime the law changed, there was these, basically, think of the books. A lot of these books were kind of like binders. You would basically slip in updated pages. So they'd be updated. You just slip those in. So the librarians and the people, they had lots of work. Obviously, when the online came around, a lot of those librarians went bye-bye, right? But I mean, many of them stayed, but they had to switch their skill to now online types of skills, okay? So today's online systems allow the distribution of tax research information and entire tax services to multiple tax staff in both small and large CPA firms. So no more fighting over books. They're accessible through the internet and They're accessible through internet and several public telecommunications networks. The materials that are available with these services are contained in databases that are stored at centralized computer locations. So, of course, Westlaw, Lexis, they have a centralized, for those of you out there who understand technology, it's a centralized service. These databases may be accessed from remote locations. You can just go on your computer and you can pull this stuff up. And if you're taking my tax research class, the library you have access to these tools and you can pull them up. I have another video on how to access those. Advantages. So let's talk about the advantages. So that's really what the online tax research systems are all about. I explained again, the key is that they make things fast and accurate, efficient, and effective. And again, with technology now, it's like at your fingertips. You can pull it up on your phone, smartphone these days. So let's talk about advantages. Advantages of such a system over a standard printed service are the ability on the part of the user to index any significant item by using it as a search item in a query. So first thing, the way that we search, there's an advantage. I'll go back over that in a moment. I'll go in more detail. And the ability for the user to tailor his or her query to fit the requirements of a specific tax problem, which can result in the research process being conducted with greater speed and thoroughness. So that research, that gets at that fast and accurate element we're talking about earlier. The online services are updated much faster than print. So that's another thing, is that the updates are much faster than in print. Updates are fast. So again, if there's an update in the tax law, it's updated very, very, very quickly, within a day or two. If you're talking about things like CCH, Checkpoint, Westlaw, Lexis, BMA, they have teams of people that update these things, and they get updated very fast. They're particularly useful in researching case law because every word contained in the case is included in a database, which enables the user to save time both directly accessing only those cases that contain the key terms, but also certain documents in the library. And it could be to obtain regularly published documents to which the researcher does not have access. So I still think it's part of the search process. So basically, you're going to see in later videos that when you're using these types of databases, there's different ways you can search through the online databases. There's keyword search, which is the most common. There's index, there's table of contents, and there's citation searches. Well, a keyword search, that wasn't possible back when it was in print. There was index and table of contents. There wasn't citation search. But now we have the ability to do keyword search, which again is what most of you out there are most likely going to be using when you first start doing tax research, keyword searching. So that makes online tax research databases very, very, very useful. All right, let's move on to the next question. Again, there's later questions that go over more of these issues. What about disadvantages? So question 6, what are the disadvantages of using an online tax service? So the main one is cost. And why? And you're probably wondering, well, I thought in the last question we were comparing printed, back in the old days to online. I said that the printed was very expensive. It was, and the cost of the online is technically cheaper. But I'm saying, if you have the option, and this will happen in practice, especially if you're your own practitioner. If you have the option of using free resources, there are free tax sites out there, versus paid. If you're your own practitioner and you're thinking about budget, I would say there's a balance. You don't just want to do one over the other, okay? Or I'm sorry, one completely, 100%. Unless again your funds are endless and you want to do the paid. You want to do the paid subscriptions. Because some of these free resources out there, like the IRS website and the US Gov website and Thomas and these different websites that have like the code and stuff, they're not updated as fast as the paid ones, but they still provide helpful things. Or Cornell Library, so law.cornell. They're not updated as quickly when you need these quick updates, but they still have these resources out there. Versus if you're searching on Westlaw, Lexis, Checkpoint, it costs money to search these things per search or a flat fee, which is very expensive. So cost is the main disadvantage out there. Very, very much the main disadvantage. Let's go on to the next question. Okay, briefly describe what is contained in each of the following tax services: Checkpoint, CCH, Bloomberg BNA, Lexis, and Westlaw. Now I want to note that I'm going to have videos later on that go through all of these elements, all of these different tax services. So this is meant to be, again, just an introduction, just like the video says. Let's start with Checkpoint. So Checkpoint, which is, in my opinion, looking at all tax professionals, is the most used. Checkpoint is a web-based tax research service that contains research material on federal, state, local, international taxation. Checkpoint contains analytical materials such as the Tax Coordinator. That's their flagship service that they actually provide. And the U.S. Tax Reporter. But the Tax Coordinator is a big one. CCH is similar to Checkpoint. By the way, Checkpoint is by Thomson Reuters. CCH is by CCH, Commercial Clearinghouse. CCH, just like Checkpoint, is a web-based service, and it has its flagship, which is known as the Tax Research Consultant. That's its flagship editorial content. And there's others that they provide as well, but Tax Research Consultant is the main one. Some people you're going to see in practice, they prefer some of these things. Hey, go find the Tax Coordinator on this specific topic. So, and also the formatting, right? It's just like a search engine, like Google versus Bing or other websites, Yahoo, whatever it is. Some people like the formatting better. That's kind of what it comes down to with these as well. I will tell you though, of Lexis and Westlaw, those two are very more powerful because they have all different other types of cases. Next is Bloomberg BNA. So it used to just be BNA, but now it's Bloomberg BNA. This one is a little bit different than Checkpoint and CCH, and really it comes down to there's what are known as these Bna Portfolios. So there's this treatise that they provide, Bna Portfolios, and I would say that of all the services, Checkpoint, CCH, BNA, Lexis, Westlaw, the Bna Portfolios, they cover the most areas. Now, they might not be the best treatises. So you might find a treatise, a WG&L treatise, which you might find in Westlaw, Warren Gorham and Lamont. That's the name, WG&L treatise. That's not the authors. That's just the name of the publishing. WG&L treatise. In Westlaw or Checkpoint, you might find the one on corporations, which is known, Bicker and Eustace, is known by many to be the best treatise on corporations, corporate tax issues. But BNA, you might find portfolios on the insurance area, on, S-Corp banks, just like so many little areas. I mean, so you might be able to be more diverse in your issues. Okay, just so you know. That's out there. So Bloomberg BNA, it's another tax research database, and many people go there for their BNA portfolios. Okay, Lexis. I'm going to talk about Lexis and Westlaw together. So Lexis and Westlaw also have their tax area. Now, these three almost exclusively focus on tax. There are some non-tax things that you can find in their services, like you can find Checkpoint, some accounting, and Bloomberg BNA, might cover some other stuff, CCH. But really, we're talking about tax. Lexis and Westlaw, we're just talking about legal law in general. They're used just by lawyers. And tax lawyers will still use these. Westlaw is very, very, very powerful. It's extremely powerful. Lexis is extremely powerful as well, but Westlaw is more used than Lexis out there in the legal universe. And these are used at law firms or by lawyers, and they cover all areas. Now, this is especially helpful if you're dealing with state or international tax issues, because yes, Checkpoint, CCH, and Bloomberg BNA, they do have materials for states, but not to the level of Lexis and Westlaw. They've got everything out there on the states. So if you have a state taxation you're dealing with, the SALT practice, Lexis and Westlaw really, really does help. All right, let's go on to the next one. Okay, so question 8, tax law provisions tend to change over time. Explain how this might affect tax research and planning. So first off, I agree with this statement completely. So let me explain. So the researcher must be aware of changes that occur over time, which may affect the outcome of the research. Okay? So you have to be aware of the changes in the law, right? Tax changes so frequently. Now, it's very important because if the law changes and you're looking at some type of case or IRS pronouncement like a revenue ruling, a rev proc, or private letter ruling, and the law changed, it might supersede or it might revoke something in what you read. So you gotta be really careful. Applicable law or facts might be subject to changes that will cause the researcher to arrive at a different conclusion and recommendation, even concerning completed research activities. So you gotta be really, really careful about that. Gotta be really careful. It does make a difference, and the tax law does change over time. Question 9. What is deemed to be substantial authority under Internal Revenue Code section 6662, so 6662 regulations? Why is this important? Okay, so this question really goes back to my video, The Introduction to Tax Research. And in that video, you might recall I gave you a list of all of the primary and secondary tax authorities out there, the big ones. That's very, very important. Of the video, that's easily the most important thing in that video. So make sure you go and you watch that if you haven't. Go look at that. Now, in that video, I broke the authorities into primary and secondary authorities. And remember that all secondary authorities are non-binding. At most, they can be persuasive. And a lot of times they're not even persuasive, they're just not even used. But secondary authorities, which using these editorial services from Checkpoint and Lexis and Westlaw and Bloomberg, like the Bna Portfolios, and CCH, right, like the tax research consultant, these different services are all secondary. They do cite, though, to primary authority. So they can be helpful and useful in tax research process. Now, primary authority is broken into binding and non-binding. Now, under IRC section 6662, which deals with substantial authority, it has to do with there's a penalty out there. There's a penalty for the positions you take, okay? So, one of the more common penalties potentially applicable is the substantial understatement penalty of IRC section 6662. So that's what we're talking about. This penalty is equal to 20% of the understatement. However, it may be reduced if there is substantial authority for the treatment of the item. So it has to be substantial authority that's on point. If a tax practitioner does rely on substantial authority that is on point, that 20% penalty will be removed or reduced, either reduced or removed completely. And those primary authorities are, which I use in the video, that list, right? Those items I call primary of the P, not secondary, those are IRC section 6662 under the regulations, specifically Reg 1.662-4D, as well as some IRS notices, which I'm not going to rely on. I'm not going to mention that. So Reg 1.662-4D has a list of the authorities. And those include the Internal Revenue Code, and other statutes out there in the U.S. Code, regulations, whether they're final, temporary, or proposed, court cases, tax treaties, not treatises, tax treaties, two different things, statements of congressional intent, administrative pronouncements from the IRS. And you can go and you can take a look at these things. And again, they're all in the video. And the idea, though, is that if you have one of those on point, you are avoiding these penalties, up to 20% understatement penalty, which is a big deal. So you want to make sure that you rely on that, and that's why it's such a big deal. So why is it important? Because you can avoid the penalty if you have a position that's supported by one of these primary authorities. Okay, question 10. Primary tax authority can be classified as statutory, administrative, or judicial. Briefly describe each. Okay, this one's actually pretty simple. Many of you out there, you've taken a U.S. government class, If not, there's three branches of government in the U.S. government. There is the legislative, there is the executive, and there's the judicial. So the easiest way to answer this is, okay, legislative, Congress, that's what we're talking about there, right? You got Congress, you got the Senate, and you got the House. They issue the tax code, which is the highest tax law of the land. U.S. Constitution is, of course, higher than that, but tax code comes next, U.S. code, and that's where we find it's kind of like the Bible of tax. So that is the statutory authority, comes from the legislative, Congress, right? Executive, that's the administrative role, that's the IRS and Treasury, and they issue things like regulations that clarify the statutes, and they issue revenue rulings and rev procs, and again, they're on that list, and we're going to learn more about them throughout the course. And then judicial, they issue case law, which clarifies and interprets the law, these different things, that interprets these things. So case law, that's what judicial does, and that is going to interpret. So really, those are the three different types of tax authority: legislative, executive, and judicial, the branches, and they create statutory, administrative, and case law. Okay, question 11. Classify each of the following items as primary or secondary tax research authority. Remember, primary comes from that list, right, that we already saw in section 6662 and the respective regulations and notices, because that's going to be considered a binding, it doesn't have to be binding necessarily. It just has to be primary, so it can be relied on to avoid that penalty. It could either be binding or non-binding. All secondary authority is non-binding. Sorry, I said that. I misspoke earlier. You got to be careful, right? You got primary and secondary. Secondary is always non-binding, and then primary can either be binding or non-binding. So we're going through this list of 5 items. We're going to put a P if it's primary, S if it's secondary. Primary, you got the statutory, Congress, right, the code. You've got the administrative from the IRS. You got cases, case law. Those are the things. Secondary is everything else. So the Internal Revenue Code, of course, that's going to be primary, right? That's going to be primary. And I'm going to go ahead and I'm going to say, okay, that's binding as well, assuming that it's going to be related. It's going to be on point to the issue. A tax court case, okay, that's going to be a primary, again, because that's judicial. And that's going to be binding, because the tax court is a riding circuit, a national court, but it's riding. It rides all over. The only thing that's subject to, we're going to learn about later on, is the Golson rule of different circuits. So we'll learn more about that, but that's binding. Okay, next. A textbook on corporate taxation, that's secondary. Treasury regulations. Okay, that's administrative. That's going to be primary. And that might or might not be binding depending on deference, which we'll talk more about that later on, so I'm not going to say anything. An IRS rev ruling. If it's on point, that's primary, and it's going to be binding. We'll just say the regulation for this case, for now, let's say that it is deference is given by the courts, so it would be binding. Let's say it's a final regulation as well. So the Internal Revenue Code, tax court case, primary authorities, binding here. And the Treasury regulations, the IRS revenue ruling, primary authorities, binding. The only thing of the 5 that was secondary is the textbook on corporate taxation. All right, similar question. Let's go through these. Again, primary or secondary. So a U.S. district court case. So that's going to be primary. We don't know. Is it binding or non? We don't know which jurisdiction. We're going to learn later on when we talk about cases, case law, that for district court cases, you have to be in the same district for it to be binding. Okay, IRS revenue procedure, that's primary, and that is going to be binding. Code section 213, that's going to be primary, and if it relates to our situation, that's binding. By the way, section 213 deals with medical expenses. The daily tax report newsletter, that's going to be secondary, right? That's not statutory, it's not administrative, nor is it judicial. An article on recent tax rulings on inventory valuation and practical tax strategies, that's also going to be secondary. All right, the next one. The next question focuses on, again, primary or secondary tax research authority. So let's go through it. An article in the Journal of Taxation, that's going to be secondary. Again, non-binding, right? That's all there is for secondary. Taxes on parade, a newsletter, that's secondary. Again, it's not, the question is, it's primary if it's one of those section 6662 items. We talked about that earlier. And again, those include the statutory, administrative, or judicial items. A U.S. Supreme Court decision on a tax matter, that's definitely going to be a primary, and it's going to be binding, assuming that it's related. I'm sorry, it's on point. A tax treaty. So I want you to make sure that you note, write this down in your notes. Treatise versus treaty. This one says treaty. Treaties are primary authorities, and if they're related, they're going to be binding. And I have that in my notes. A treatise is a summarization of the law. Think of it like an article or like a textbook on an area of law, of tax law specifically. Very, very detailed, very nuanced, goes really, really in detail. If you're looking at a specific area, working in a specific area of tax law, like corporate tax, like mergers and acquisition, there's treatises on mergers and acquisition law. That's secondary. So treatise is not the same thing as treaty. The word is not the same. So U.S. Australia income tax treaty, that's going to be primary and binding, assuming that it's on point. A discussion on earnings and profits in the Checkpoint Tax Coordinator second 2D, which is second tax service. So that is their flagship editorial. Think of like an article of Checkpoint. That's what the tax coordinator is. That is secondary. That is secondary. Okay. The next question goes to the target readership. Target readership, we're not asking the same question of primary versus secondary anymore. We're just asking who specifically reads these journals. Okay. So the first one is taxes. Taxes, which is a magazine. Okay. Most magazines are going to be tax practitioners because they tend to keep their articles real current and real short. So if you have like a Florida Institute of Certified Public Accountants or Florida Bar, something like that, that's going to be that's going to be practitioners, not academics. Tax practitioners. Journal of Taxation, that's going to be tax practitioners as well. But now we're getting into more detailed articles, and the more detailed articles, they get more dicey. So now you're talking at a very, very, very detailed level. Right? You might have for Taxes Magazine, you might have articles that are more broad and they cover just general tax issues that are out there. And then Journal of Taxation, you might have more articles like very detailed issues on mergers and acquisition law, just so relevant to that. Practical tax strategies, that's going to be like the Taxes Magazine. So that's going to be just general tax practitioners. I'll abbreviate that. Tax advisor. Tax advisor is actually the AICPA. That's their tax thing. And tax practitioners, they read that as well. So far you haven't seen any that are academic. The last one, the American Tax Association, Journal of Legal Tax Research, that is academic. That is an example of an academic, right? ATA, that's an academic organization. ATA, AAA, which is the American Accounting Association, that's an academic organization. Academic tax, nothing against academic tax. I think that, so as many of you know, my background is I have an accounting background. I'm a CPA. I have my master's in accounting, but I also am an attorney. I have my JD LLM. Okay. And I also have my enrolled agent certification, which is like the trifecta. That's like the three tax certifications: enrolled agent, CPA, and attorney. Okay. So there's faculty that teach tax. They have a PhD in accounting, and some of them do research and they teach tax courses. Now, tax, as you know, is law. It's not accounting. So you're wondering, why is this person, a PhD in accounting, teaching a tax class? And the reason is we do need people with PhDs in accounting teaching tax. So don't think any ill will towards them. Yes, I might be more suited to teach you about practical tax strategies and things like that than someone with a PhD in accounting, although some people with PhDs in accounting might have lots of industry experience, so they might be fine as well. But the reason why accounting is so important is, as you know, many corporations on their 10Ks, they have to disclose all these tax disclosures. And a lot of the research they do deals with that. So there is some benefit to that type of research, but it's mostly academic. So these American Tax Association and AAA, American Accounting Association, these journals, they're going to be dealing with issues that mostly academics are looking at, things like that. And again, they focus a lot on like the footnotes and 10Ks of tax. They're not focusing on practical issues. So just keep that in mind. Keep that in mind. All right, question 15. In the tax research process, the researcher has an obligation to the client to evaluate authority. So we're talking about step 4. And again, in my video, right, I talk about the evaluation authority and I provide that list 1 through 10 to help you. But again, it's just a rule of thumb. It's not perfect. Do the precedents in all tax authority carry the same value? Explain. I just pretty much answered the question. If you go into my video, right, if you go into my intro to tax research video and you go to the table that I provide you of all the different types of tax authorities, the primary and some secondary even, I list from 1 to 10 these different authorities and whether one is more precedential than another. For example, the highest level, number 1, is the U.S. Constitution. Number 2 is a U.S. or to a country treaty and the Internal Revenue Code. Number 3 is a regulation that's given deference or certain case law, like Supreme Court cases. Okay? So there is a level. There's a level in terms of what is higher than other things. Now, we will talk in later points later on about, this is more advanced topic, but we will talk about it, about what happens if you have a, 2 number 3s, a regulation and a U.S. Supreme Court case, and they both apply, which takes precedence. That's kind of where you get to this sticky situation. So go back over that table and go through that and understand that. And again, it's not perfect. It's not meant to be perfect. It's meant to help you as someone that's new to the tax research process understand. It doesn't always work, but most of the time it does work. It stacks up the way I've listed it. All right, question 16. Step 5 in the tax research process is concerned with reaching a conclusion or making a recommendation. If one has not found a clear answer to a tax research problem, how is a conclusion or recommendation to be reached? So this is a very good question. Very good. I'm glad that this is here. So if a clear solution to a tax research problem has not been attained, the practitioner must use professional judgment. So of course, here's where judgment comes in play. And we're going to be talking about where times of like use of artificial intelligence and stuff like that later on in the tax research process down the line. We will talk about that. But one thing is that there still is this judgment aspect in tax. Some faculty out there that don't teach tax, they might say, oh yeah, tax, a monkey can do it. No, there is judgment involved when it comes to tax, and it's usually in the tax research area. But using professional judgment as the proper conveyance of the research results to the client. So what we're saying is that if it's not clear, if there's no clear conclusion, use judgment. Maybe there's 3 possible outcomes that a client has to a situation. And again, it's not clear which one it is. And maybe the reason why it's not clear to you is because there's some open information you need from the client. That happens a lot. You're still waiting for client information, but you still need to give them a presentation because, they want something. They still want a letter, even though they haven't given you the answers to certain things. This happens a lot of time in tax practice, believe me. Well, talk about what you think is most likely to happen. Just based on, and again, condition that you say, okay, well, it's not guaranteed to go this way, but this is most likely to be the case. Or at least you need to address it from the angle of, okay, well, if you answered my question, you told me this, if it was a divorce instrument, then it would be viewed as alimony. But if it's not a divorce instrument, it's not alimony. I'm still waiting for the facts for you to determine if it's a divorce instrument, kind of like that. So you're giving multiple outcomes and you're kind of laying it out based on the facts. Okay? In addition, the client might be informed of the alternative possible outcomes of the disputed transaction and give the best acceptable recommendation. So again, you got multiple outcomes. Give the best of what you think. And this is where you kind of get to, okay, if you got 3 possible outcomes and you're working with a client and you have bases for all 3 outcomes, you of course want to help the client as much as possible within the bounds of the law. I've had students in the past take me for tax research, and one thing that a few students have come back and told me is, oh, you taught us tax research, you taught us well, but one thing you didn't teach me well, or at least you didn't stress, was, the the seniors and the managers I work with, and of course I'm not going to tell you the names of the people that told me this, they pretty much said that like, oh, I need to make sure that I get what the client wants. And it's like, okay, well, I understand the client wants to avoid tax, right? They don't want to evade tax, but they want to legally do this. But if there's nothing out there that applies, you can't just out of thin air come up with some type of a conclusion with no rationale or no authority. So you got to be careful, okay? But if you have 3 different outcomes, you have 3 different supported positions out there, and they all are good law, but you just don't know because there's possible situations. Maybe you have multiple private letter rulings, different things like that out there. Then you lay down all the situations, CYA, right? CYA with the client. And you obviously want to make sure that you get the best situation for your client if it's possible in that case. But again, if there's law out there that's on point and it's against what your client wants, you got to go with the law that's on point and say, I'm sorry, client, but that's not going to happen. They might fire you, they might not, right? But that's what we're doing as tax professionals, okay? So one thing I want to note is that there's this more likely than not standard. So several years ago, through GAAP and IRS, there's this thing that came out called FIN 48, Statement on Financial Disclosures and for tax positions. So more likely than not, as it suggests, is more than 50%. And if you have multiple outcomes, you want to go with the one that's the more likely than not, more than 50% case. Now, one thing to note is that creating a memo for your supervisor, of course, if you're asked to do a memo for a supervisor and you got 3 possible outcomes, they're almost surely going to want you to give the one that you think is correct. So be careful on that. So if it's in my class and I ask you for a conclusion, I want you can mention the 3 outcomes and you can say that like, oh, they're all possible, but you still need to give me what you think the correct answer is. So, and that's very, very much the case in practice when it comes to supervisors. They a lot of times want you to do that because, yes, we're going to talk more about the purpose of memo writing and your job as a staff in an accounting firm or in a corporation or business, private accounting, doing research. But you're going to learn that your job a lot of times is to make the person's job above you easier. So you're kind of summarizing the law, but they still want to know what you think. They still value your position. All right, let's continue on. All right, question 17. The final step in the research process typically involves a memorandum to the client file and or a letter to the client communicating the results of research. List the items that should be found in the body of both of these documents. Okay, so in the video, in the Intro to Tax Research video, and the materials, I walk you through the memo. So let's first start by the memo. And by memo, and there's a video I have that's how to write a tax memo. Very, very helpful. How to write a tax memo. Very helpful video. And it lays out, these videos lay out the structure of a memo. The parts, what goes in each, as well as the how to write a tax memo video. I start from blank and actually go through a fact pattern to show you like what it should look like and what you exactly do. Very, very helpful videos. Definitely recommend you go over those things. But let's just summarize. So when we're talking about memo, we're talking about the memo to the client file, which means we're talking about internal to the firm. So there's really 4 parts. And these 4 parts, they really follow the IRAC approach, which they use in law schools. Issue, rule, analysis, or application, conclusion. Issue, rule, analysis, application, conclusion. IRAC is an acronym. So facts, issue, analysis, and conclusion. Those are your 4 parts in your memo. So the facts section, as it states, you're restating the facts that the client or supervisor, whoever gives you. You want to restate just the facts that are relevant to the rest of the memo. Issue, you're summarizing the issues. So there might be one issue or multiple issues. And a lot of times, in practice, you might be told by a supervisor, oh yeah, here's the issue. They might just tell you what it is, and they want you to go ahead and they give you the issue. Analysis is the most important section. This is where you're taking you're finding law, starting from the highest level of the code and going down to the most narrow. And you are taking the law you find, applying it to the facts that you're given that are important, and then coming out with rationale and reasoning, and then you get your conclusion, which is the last part, which gives you the end, the conclusions, the recommendations. Now, again, this is for the client file, so you're talking about internal. A client letter will be less technical. It won't have code sections. It won't have citations like you would have in a memo. It would have similar ideas and understanding, but it would be all, of course, summarized for sake of time, and items would be not as fully fleshed out, okay? But that's the idea. So that is really the breakdown of the memo and client letter. 18. What is the purpose of citing relevant authority in research memos? So I mentioned, we were going to talk about this earlier, but at your job as a tax researcher, if you're working at a firm and you're a lower level to your supervisor, you're doing, your main job is going through and finding authority and making arguments that you want the person above you to be able to look at that same authority and see, hey, I agree with you. Or they might understand the area better than you and then say, oh, but you forgot this angle. So your idea is basically to make the person above less time and work so they can go through it. Okay? And a very important element of that is citing. So citing your sources. And you, again, in the How to Write a Tax Memo video, you will learn how exactly to cite, because it's not the same as APA and your English class, your history class. Very, very different. It's a legal memo. And we cite differently. There's also a different citation format, and I provide that to you with respect to those assignments and whatnot. But you're citing to these sources. So again, if let's say you're a staff at an accounting firm and the senior gives you a research assignment. So if the senior reads that memo after you're done, let's say it's a 2 or 3 page memo, and they read, you write a sentence. Medical deductions are allowed under Section 213 of the Internal Revenue Code. And you cite to Section 213, right? Or medical deductions are allowed if blah, 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 blah. And you write out the propositions needed under Section 213. You cite to Section 213. If there's something in there that the reader, the senior, either they're questioning or they're like, oh, that's interesting, that's a good point, I should go look more into that, then they can go to that actual citation, that actual element, and they can look more into it themselves. So again, a lot of what you're doing when you're younger and you're writing memos, you're doing tax research, if you're doing this for a client, then you're doing everything. You're just determining the ultimate situation. But if you're in some type of hierarchical business setting, firm setting, and you're on the lower end when you're first starting out, a lot of what you're doing is you're basically going and summarizing the rules. And yes, they still want you to take a stab at what you think would happen, what you think should apply. So I'm not just trying to say, oh yeah, they just want you to give bullet points of the areas of law. And that happens sometimes. You might be asked to do that. But they still a lot of times want to know what you think, how things will pan out and whatnot. But what the main thing you're doing in that case, that hierarchical, and your staff and you're doing work for the senior, is you're trying to provide a summary for less. So again, it makes their job easier, especially when you think about billable rates, right? As a staff member, you're a much lower bill rate than a senior or manager or senior manager or director or shareholder, whatever it is. So think about that. And very, very important. That's why citations are very important. And when I teach tax research classes, I am very, very big on citations. So make sure you get those correct, or else you'll get points taken off. All right, question 19. It's been said that tax research process is more circular than linear. Do you agree with this statement? Explain your answer. Yes, I couldn't agree more. And here's why. In many research situations, a fact generates an issue that in turn may lead to an answer or the need for more facts. So basically you've got this facts lead to issues, and then you have, okay, well, I know this issue, which then you look at the law, right? You lead the authority, brings you to the authority, and then you look at the authority. So like I give an example of in the intro to tax research video of I go through divorce and separation. And there's also another video I have on issue identification. That's divorce separation. And what happens is, you have an issue or a fact pattern. You go through the issues. You find, okay, section 71 deals with alimony. And it's like, okay, well, we need a divorce or separation instrument. Now we have more. We have to ask more facts of the client. So it goes back in a circle. And then it keeps going and going. And basically, it's a circular approach that a lot of cases it's never done. It keeps going back and back and back. I mean, eventually you get to a point that you feel like, okay, the circle is ending. That's really what it is. So similarly, once an answer is found to an issue, it may also cause a new issue to appear or the need to gather more information. The same situation occurs in evaluating authority. So if you're evaluating authority and you pull up one authority, you might find another authority and you have to ask, okay, well, which one's more on point? We need more facts to determine. Frequently, there will be ambiguity between items of authority that will require the researcher to use his or her critical thinking skills. And again, that's where you jump in to ask more facts and whatnot, because it might help you determine, okay, well, this authority now makes more sense. This may result in a new issue becoming known. The researcher would then be required to gather additional facts, find additional pertinent authority, and evaluate the new issues. So yes, this is a circular process, and I have just gone through and explained how. Question 20. What is the tax compliance as practiced in the United States? Give several examples of activities that can be classified as tax compliance. So I didn't talk about this in the Intro to Tax Research video materials. We're now going to talk about compliance versus planning. Compliance versus tax planning. Because it's very important to understand that tax research goes into both compliance and planning both. It's not, a lot of people think that tax research only is on the planning side. That's not correct. Tax research involves both aspects. Now, compliance consists of gathering pertinent information, evaluating and classifying that information, and filling out any necessary tax returns. Compliance also includes other functions necessary to satisfy governmental requirements, such as representing a client during Internal Revenue Service audit. So again, research can affect compliance. Specifically, you might try to be figuring out, okay, well, I know that these facts have happened and I know how it works, but you might have an issue. How do I report this on this form, right? You might have a change in accounting method and you need to figure out, okay, form 3115. How exactly does that work? I was working on an issue of my firm the other day and about patents, and a client wasn't taking amortization on, not patents, computer software, and we had to determine, okay, well, how should that computer software be deducted? Should it not be deducted? Should it have been research and experimentation or 174 over time? Should it be 162 trade or business when it was created? Should it be a purchase cost? Should it be a licensing cost? All these different things, and we ultimately came to the realization that it should be amortized over 3 years under Section 167. And the issue, though, is that this happened several years ago, and they never took any amortization. And you can only amend your returns from 3 years back. So we actually had to file Form 3115, change the accounting method. And you're saying, well, how's that change the accounting method? You didn't take any amortization or depreciation. You're right. But the tax law, it actually basically says that at that point, it's viewed as an incorrect accounting method because you should have been taking amortization the 3 years straight line on the computer software, even though you didn't. So that's basically how they view it. And that's an example of the filing issue of it. Okay, how do we file? What do we do? Do we have to amend? Well, we can't, because you can't go back beyond 3 years, and it was much farther beyond 3 years. So it's a Form 3115. That's an example of compliance research. Had to figure out how exactly to fill it, what box we fill in, what code it was, whether it was code 7 or 18 or 19, all these different things. Okay, makes a big difference there. Question 21. What is tax planning? Explain the difference between tax evasion and tax avoidance and the role in professional tax planning. Okay, so first thing, remember, we had compliance and planning, and those are two different things. And again, research involves, or research can be either one. Research can go here, it can go there, it can be a combination of both in terms of a situation. So let's first address that. What is tax planning? So tax planning is the process of arranging one's financial affairs to minimize any tax liability. Much of modern tax practice centers around this process and results in what's called tax avoidance. Now, that gets to the next question, the difference between tax evasion and tax avoidance. Tax avoidance is illegal and evasion is illegal. So there's a famous case out there many years ago, Supreme Court case by Justice Learned Hand, basically saying that the justice ruled in a case that taxpayers are allowed to arrange their affairs in a way that, hey, if it's under the law and it avoids taxes, it lowers your taxes, that's fine. That's allowed. That's Congress. That's what they've done. So if there's a loophole, it's possible. Okay, Congress needs to close that loophole, or IRS needs to come in and clarify, or do something, or case law needs to address that. That's if it's out there and it's possible and it's under the law, that's fine. Tax evasion is basically saying, okay, well, I have salary, I have W-2, I'm supposed to report that on my 1040 as W-2 wages, but I'm not going to do that. That's obviously illegal. We all know that. Okay, under Section 61, gross income, you have to include your wages. Now, I'm not saying personally I do that. Me as the person's presenting here, I always record my wages. I've always done that on my tax return. But I'm saying if that's what happened, that would be an example of tax evasion. Versus again, avoidance is a legal situation where, hey, because you meet the criteria, you don't have to report your income, okay, or you get a deduction or whatever it is. Question 22. Tax planning falls into two major categories: the open transaction and the closed transaction. Discuss each type of transaction and discuss how each affects tax planning. So open versus closed. This is very important. Open versus closed. So in an open tax planning situation, the transaction is not yet complete. So that's the key item. Not yet complete. So it hasn't yet been finalized. Therefore, the tax practitioner maintains some degree of control over the potential tax liability, and the transaction may be modified to achieve a more favorable tax treatment. So what we're saying is, let's say you have the conditions, right, for a merger acquisition. Well, there's lots of conditions that have to be met. Well, if the transaction hasn't yet been completed, there still can be stuff to be done to make sure that, hey, this is going to avoid taxes or whatever, right? A closed transaction, it is complete. It is complete, and there's nothing that can be changed about it. A closed transaction is complete. All the pertinent actions have been completed, and tax planning activities may be limited to the presentation of the situation to the government in the most legally advantageous manner possible. So it's completed. We can't go and change the facts around. So if it's that same merger acquisition, the deal has already occurred. We can't go back and we can't change the things. And that's a big difference, open versus closed. All right, so I hope you've enjoyed that. Hope you've enjoyed going over these different questions, these different problems. Very helpful. Again, go back, watch that intro to tax research video. Very helpful along with this. And please stay tuned and watch my other tax research videos.